We have the privilege of sitting down with Ed Eshuys, somebody credited with the discovery of Plutonic, Bronzewing and Jundee. He's also negotiated with some giants of the mining industry, including Joe Gutnick, Mark Creasy and Robert Champion de Crepney, just to name a few.
Mate, Ed has played a massive part in big corporate moves. He's been amongst several takeovers, rode the highs and lows of the gold game, be it Great Central, Wiluna when it was Apex Minerals, even having a front row seat at the Hemi discovery, part of the strategy that led to that too.
Add to that, he lived through the stories of Sons of Gwalia, as well as leading St. Barbara for a period of time.
50 years on, Ed is still chasing discovery, mate. He's energised by the future, hunting the next big find, a true giant of mineral discovery. He's got a wonderful strategy for actually finding stuff. And when you see serially successful people like Ed, with just discovery after discovery next to their name, you know at that point it's not luck. You must be doing something right. We're thrilled to share the conversation. Mate, how often is it that we get to sit down next to someone that is regularly attributed with three enormous discoveries, being Plutonic, Bronzewing and Jundee, but not just those. Ed Eshuys has been around the footy at many, many other discoveries, and we're delighted to have him in the hot seat with us today. You've been doing a lot of research about Ed, and I'm insanely curious to have this conversation with a serially successful explorationist like yourself, Ed.
Mate, you couldn't have said it any better. Ed, we're very grateful that you've joined us here today, and I'm very curious to hear, of those three discoveries that Trav just mentioned, which are often attributed to you and the team you worked for there, which one was the sweetest?
Bronzewing was the sweetest, because by then we knew after the discovery of Plutonic what we had to do to be very focused on achieving rapid success, and there was good science behind it, and good geologists working with me in the team that understood that process and that requirement also, because we all know that capital is very impatient, and risk capital even more so. So the one of the driving forces in my thinking has always been to do things in a very timely manner.
I think I read that Bronzewing was hit on the 64th hole of a 65-hole program. Is that right?
Yeah, that's correct. I mean, basically what we were doing there, we knew there was gold at Mount McClure to the west, and there was gold at Mount Joel to the east, and there was this area, a substantial area in between that was undercover. And we'd figured that the laterite that was exposed at Mount McClure to the west most probably went undercover in the area in between. So we decided that we'd drill along existing roads and fence lines at 400 metre spacing. The reason for the spacing, that wide spacing, was that if there was going to be this laterite under the cover, and if there's going to be gold under the laterite, then there would be some distribution of gold in the laterite profile, and obviously if it's going to be of any size, it could be easily 400 metres in dimension. So that's what we did, and so not all we basically drilled these holes in a circle, the north-south line, east-west, north-south, and then from west to east. And as you said, it was the second last hole of the program that intersected the laterite at about 20 metres below the surface. And it had, from memory, it had about 4 metres of 2 grams. But the hole kept going, and we intersected 10 metres at 1 gram at a depth of 70 metres. The critical thing was that gold was associated with quartz veining in altered mafics, which was the target. So having got those results, we accepted the fact that this was pretty interesting and stepped immediately 200 metres to the north with RC drilling, and the Bronzewing discovery was made as a consequence of that discovery. The second last aircore hole, or was RAB drilling was called in those days, the second last aircore hole had the 2 grams at 20 metres and 1 gram at 70 metres, which led to the discovery of
The way your approach to drilling has been described is, it sort of puts a smile on my face. I'll read out some of the snippets, but one of them was a frontal attack with the drill rig. Another was that you weren't afraid to drill often and drill deep. And thirdly, that you attacked the area with your customary go-for-broke enthusiasm. You clearly had a different approach. What was it that you sort of put it most down to that enabled the 3 discoveries in relatively sort of short succession there?
We understood the geology. We could see the potential scale, and so the step from the discovery type intersections to the next step after that was to see the scale of it. And once the scale of that had been established, like whether it was 1 kilometre in strike or 2 kilometres in strike, that then determined the next phase of drilling and the spacing of it, and also, of course, at what depth. You always had to get the third dimension to get a better understanding, of the potential of the deposit. And the concept of doing early diamond drilling was to help to understand the geology better, because any geologist will tell you that trying to understand the geology from RC chips is difficult, particularly if they're weathered. So stop sort of arguing with yourself. We drilled early diamond holes to get a better understanding.
What was the sort of emotion like in the camp when you made these discoveries? Like for a geologist to make one of these things in their careers, a pretty exciting feeling, and I'm sure there would have been a lot of doubt around the market and around the geological community about how you guys were approaching things. So if we can sort of put ourselves inside the room with you guys, what was the sort of feeling?
Well, it was one of it's the chase, right? And it was always one of great excitement, right? From obviously the geologists on site to those that were working with me in Melbourne and the board, including Joseph Gutnick in those days. He was always very enthusiastic and followed the advice that he was being given. And so, you had a very collegiate and a lot of camaraderie on site because of the success that was being achieved.
And you mentioned your relationship with Joe Gutnick there. It was one of the most impactful in the market on geology in Western Australia through the late 80s into the 90s. What do you sort of ascribe the dynamic like and the ultimate success of that relationship to?
What an unlikely individual to have bold exploration success in WA. It's remarkable.
Well, Joseph was smart and had access to the money, and by then I'd already had 20 odd years experience in Western Australia. I thought I understood the regolith and how that worked, and one of the reasons for that is that I, as an individual and as company representatives, we supported the CSIRO research into laterite sampling to tell us what was happening underneath, and that was also very effective. So that was the first leg, and then once you've intersected the drilling, once you've intersected gold in the drilling, well, then the only thing to do is to keep drilling, rather than get sidetracked by doing more geophysics or some other exploration technique. We just said no. We had the gold. We understood where it sat, so let's keep going. And that, the management team and the board, of course, were all in favour of that because it produced the results.
Can you tell us more about that relationship with the CSIRO and how that kind of unlocked some of those discoveries and your thinking?
Well, yeah, I mean, when I first went to Western Australia in the early 1970, my exploration manager was at that time was Ray Smith, who then went on to work from 72 onwards at the CSIRO, and very specifically studying sampling of laterite nodules to get a sense as to what was happening beneath the laterite cover. And basically that research started in 1972, and Plutonic, which was as a result of doing laterite nodule sampling in an area where there had been no gold previously, was applied, resulted in the discovery in 1986. So this was a long-term research project that, in the end, bore a lot of fruit. But it was a long time in getting to the point. And I, as an individual, was always keen on understanding what the regolith was likely to tell us. And the companies that I was working for, we always supported that research on an ongoing basis.
And just to spell it out, what was the finding from the CSIRO that actually helped you to make gold discoveries just by sampling the laterite?
Well, okay, when we first went to Plutonic, we sampled at what was the old mineral claim boundaries, corners. So that was like a 1 by 2 kilometre grid. And the first time we went there, results generated a 1 gram per tonne sample. Now, 1 gram per tonne sample in a laterite nodule, in essence, probably pick that over every day of the week. But this was in an area where there had been no previous gold mining, no historic gold mining. So we figured that was pretty interesting. So I went back and collected another round of samples, and the second time round we got samples with 30 grams per tonne. And of course then it's self-evident that the only thing to do was to drill. And we drilled 25 holes first up. We drilled 30 holes first up. 5 of them hit gold. The other 25, in the end, were all within the open pit. But only 5 of the first 30 holes intersected gold. But, of course, they were interesting results, so we followed them up immediately. And the rest became history.
And this played a role with Bronzewing as well, which was a pretty fascinating discovery story, as I understand it, because initially you had the thinking in the market, it was a kind of lower grade ore body, but that changed once you started drilling it at depth. Is that right?
Yeah, well, I mean, basically even from the outset, the first RC results, I don't remember them exactly today, but the first RC results certainly at Bronzewing intersected, 5 grams per tonne over several metres. And that again, changed the landscape. But the important thing was taking the step from getting 10 metres at 1 gram per tonne at 70 metres, which is not economic by any standards, but understanding the geology and following that up. And we didn't have to go through a joint venture committee meeting or try to convince some management who didn't understand what this really could mean. We didn't have to do that. Joseph and I said, okay, this is a good result, we'll follow it up. And that's what we did.
You did at a point, and you relayed this story to us when we spoke a week ago, have to work with Mark Creasy a bit, and there was a deal you did to take 51% ownership of a project and put up a bit of capital that everyone else in the market who had looked at wasn't willing to kind of take. Can you take us through that story?
Yeah, sure. After the discovery of Plutonic and the sale of Plutonic, cash was used to explore, in part, for diamonds in the Plutonic area, and there was good. Yeah, I mean there was some humour about that, but in fact, Anglo or De Beers were exploring for diamonds in the same area. So it was a valid. There was a valid basis for exploring there for diamonds, and Joseph was keen to find diamonds, and so we persisted with that for some time. But then I do recall that Mark Creasy approached us at one time to do he had Jundee and he had a large part of the Yandal Belt, which he'd joint ventured out previously, and people had spent money. They were looking for base metals at one time, and he got the land back, and he kept this very large land package together. But the deal that he wanted at the time was to get a 51% interest in Jundee. He had to put up a nominal amount as an option payment, and I think it was something like $50,000 at the time. But the hook for Creasy was that he wanted $3 million cash after 12 months for that option to be exercised. And Joseph wasn't ready to take that jump away from diamonds, so we sort of left it for the moment. And then as the diamond exploration wasn't being that successful, I advised Joseph that maybe we should go back to Creasy and see if that deal was still possible. And it was. And he told us then, and he's made it public himself, that in that 12-month period, he had 19 different companies come to look at the land, in particular at Jundee, and they all balked at this notion of having to pay $3 million cash in 12 months' time. So it didn't proceed. Now, I said to Joseph at the time, if we can't work out in 12 months whether we can pay $3 million to exercise the option to earn 51%, then we shouldn't be in this business. So we agreed. And while we're negotiating with Creasy on Jundee, he said, "Oh, look, I've got all this other land, to the south, and I'll do a joint venture deal with you on that if you like. You can earn 70% or 75% by spending all the money up to and including a feasibility study, bankable study, right? Okay, job done." And we agreed then to do both Jundee and the rest of the Yandal Belt at that time. And there was no upfront payment for the joint venture on the rest of the Yandal Belt. So it was a good deal for Great Central at the time. And of course, history tells us it ended up being a very good deal for Mark Creasy as well.
I mean, this sort of led to his first big breakthrough success. What was it sort of like negotiating and dealing with him?
Oh, it was extremely difficult.
We thought he's a hard bargainer.
But it was difficult, but it was not unreasonable. We had many late night meetings with Mark to nut out what was fair to both sides, and I think in the end, the deal that was struck looked favourable, to Mark, but was also favourable to Great Central. It ended up with 100% of it then.
The Jundee that we know as Jundee today, did it always look and feel like the special Jundee
Well, Jundee's in two parts. Well, there were three parts to Jundee, right? There's Jundee, which is the deal that Great Central did with Mark, and then Eagle and another company had the western part of Jundee, and they'd already found some gold there. And then there was an eastern block which Creasy kept to himself. When we first drilled there, we ended up, I think, in the oxide zone about 1 to 1.5 million ounces, and that happened pretty rapidly. And then I thought, okay, so what happens at depth? So I thought we knew what we're doing, so we targeted, obviously the higher grade results in the RC drilling in the oxide zone to see what happened. And the first few diamond holes got very little. And so I realised that we actually weren't that clever after all. So I said, okay, the only way to tackle this was, we had a strike length by then of about 8 kilometres, was to drill diamond holes, to about 400 or 500 metres deep at 400 metre centres along the whole strike. And that was the plan. The second, I think it was the second diamond hole, and they were just grid spaced. There was the only geological impact was that we had this strike length and we needed to find out what was happening. And I think again it was the second hole intersected Barton, and it was a high grade result, and then we followed it up from there. So did it always look special? At the time I remember thinking that Bronzewing was pretty good, but Creasy, to his due, told me no, Jundee was always going to be better. So maybe he had a more insightful view than I did at that time.
And there was a view from you and the team at the time that this would become a massive pit. Is that right?
Yes.
You worked through that 90s period in an era where the gold price was going against you, unlike it has for the last 20 years, which is a completely different framing to go back and think about. But was that sort of constantly in the back of your mind there?
Yeah, it did. I remember going to a conference gold conference in New York. Maybe it probably was the Denver Gold Show, not New York and Denver, in '97. There was so much exploration going on at that time around the world, not only in Australia. I thought there's going to be so much gold that's going to be found. Now, whether the two are related or not, but the gold price started to fall from then on. So yes, the fall in gold price had a big impact on how we're thinking about it. But at Jundee, the pits we created several pits. They wouldn't actually, as much as we might have wanted, they didn't join up. So we just took them as they were.
There was some pretty sort of vocal debates between Plutonic and various Australian politicians at the time, because I think we were, as a central bank, selling a large portion of our gold into that market too, which was a headache for all the gold miners across Australia. Yeah,
well, it was at that time that Australia sold its gold when it was already the third largest gold producer in the world. It actually made no sense, but they obviously, the politicians were obviously getting other advice.
JD found this description somewhere. The Gutnick Eshuys was described as one of the most creative capital-intellect combinations in the market. What do you think of that characterisation?
It's a very complimentary comment, of course, but look, we've worked well together for a long time, for a long period of time. And I think it was the fact that Joseph understood the risks that were involved, and I guess I understood the geological risks, and that combination worked very well.
You reflect a lot on the access to capital being enabling the pace of discoveries. And I'm flashing forward a lot, but you know, in a lot of ways, like your DGO was you being a financier for exploration. Kind of you flip roles. You were now Gutnick. Did you ever see it that way?
Yes and no. I mean, success in exploration is largely a function of how much capital there is. If you accept the fact, yes, you've got to have strong technical teams and you have the environment in which you can do that work. But in Australia, most explorers are starved for capital. And in my view, exploration success is improved with more capital being available. And I've had this conversation with very large institutional investors, and that point had never occurred to them. There's this concept that exploration success in Australia is it's a speculation, but it doesn't have to be. It can actually be. Success can be a function of knowledge, application of new technology, and the smarts of the team. And that's the one. I mean, one of the benefits in Australia today is that modern day exploration has been going on for 60 years or more, and as a function of that exploration, it's all been recorded at the Mines Department, whatever it's called today. And that's readily accessible. So you can actually keep building on past exploration efforts for success.
The concept of drilling something out like Swiss cheese comes up a lot with the way you've approached things. I know we were speaking about it just before, but how do you reflect on that sort of statement?
Well, I think I always regard it as a derogatory statement. But it, in fact, was necessary to get to indicated resources, or at least probable reserves, to be able to raise the capital to develop the mines. And that was the fundamental reason. And the only time we did drill holes like Swiss cheese was if we actually knew what we had. And, they were largely a program, or always a program of infill drilling to make sure that we actually understood the distribution of the gold as it was. I mean, fortunately, we never made a mistake. We always were able to produce to the reserves that we'd estimated.
The turn of the century, you're MD of New Hampton Goldfields. What's your thinking with this new chapter in your career?
Well, okay, so I thought that we could create with New Hampton a gold exploration company, and basically do the same as what I'd been doing with Joseph and Great Central Mines and Centaur. And it had New Hampton had a small operation. Yes, it was short of a feed. Well, we'd been there before, so I thought we could fix that by drilling appropriately. And it was, close to Kalgoorlie. It was in the right place. And it didn't actually quite work out like that. And then we acquired the Big Bell mine, and that was part of giving New Hampton an additional operation and an additional exploration opportunity. But with most operations suck all the energy and all the oxygen, and exploration tends to get put to one side, and that's what happened in that case. And so it wasn't. And then it got taken over by Harmony, which wasn't my idea, but by then the largest shareholder of New Hampton was Robert Champion de Crepney, and he sold out to Harmony to basically divest that interest. So that I wasn't in favour of the price of the takeover and objected to it, but the rest of the board said no, that's what happened.
How hard was that sort of transition? I know you'd been doing a lot of management in your later years at Great Central, but that transition from exploration and working within a framework to being a manager and running a company.
Oh, that was a challenge, right? Because now, working with Joseph was clearly responsible for raising the capital. I was responsible for spending the money wisely and exploring. When we got to New Hampton, of course, I was responsible for both. And that was, even though I'd been in the market and people knew who I was and what I did, it was still difficult. And it was also a difficult time, in the market, full stop. So yes, it was not easy.
You then headed up after sort of finding your way into St. Barbara of all companies, which was it's a company with a fascinating history and plenty of ups and downs, but sort of circa 2004, you find your way in there and then get your hands on some Sons of Gwalia assets. Tell us about that sort of period.
Okay, well, Sons of Barbara are the shareholders of St. Barbara. The shareholders of St. Barbara were unhappy with the management and they rolled the board and appointed myself as the MD and Colin Wise, who I brought along as the chairman. And this major shareholder at that time was Resource Capital Fund, and I'd worked with the principals of that fund in the development of Bronzewing. They were the early financiers of Bronzewing. In fact, they lent some money to complete Great Central money to complete the feasibility study on Bronzewing. So I had a good relationship with them. But prior to that, I'd spent a year advising Sons of Gwalia on their exploration. This was to the board rather than to the management. So I was very familiar with the assets and in fact was advising them on what I thought should happen at Sons of Gwalia, at the Sons of Gwalia mine, and elsewhere for that matter. But and Sons of Gwalia mine was the principal asset. I mean, they had Carasue Dam and they also had Southern Cross operations. So I was quite familiar with those assets, and then Sons of Gwalia went into administration because they were concerned. The management were concerned about meeting the future hedge book requirements, and when they approached the counterparties about that, they said, well, if you have concern, then what can we do? So they put Sons of Gwalia into administration when Sons of Gwalia had $60 million in bank. So it's the people forget these sorts of things. And put it into administration, and I thought, now I was at St. Barbara, I thought this is interesting. So it became clear that the administrator wanted to sell everything in one package, and in terms of the gold and the lithium and Greenbush's tantalite aspects, Wodgina, they were treated separately.
There are a lot of different DOCA proposals that were put in. There were so many proposals, but was the administrator just favouring a clean outcome? Is that how you interpret it?
He was very much in favour of all the gold assets being done in one go. And the question is, well, how do you do that? Right? So, because there were environmental bonds of some 30-odd million attached to the gold assets. So Resource Capital Fund was the major shareholder in St. Barbara. I put it to them that we do this Sons of Gwalia deal. They had to figure out how to get rid of these bonds, finance the bonds. When St. Barbara as a company had a market cap of 50, how do you finance bonds of 30-odd million? Well, they got letters of credit and sold that issue for us. And then we were able to buy the assets, the whole company, for $4 million cash plus replacing the bonds. And so the outlay was $4 million. And then we had to work out, okay, what could St Barbara do now? So we decided there and then that we would sell Creasy Dam and the Southern Cross operations and focus on Leonora, Sons of Gwalia mine. And of course, was that a good decision? Well, it was all we could do at the time. Rather than dilute, raise a lot of capital and dilute the existing shareholders. So we did sell that, and of course, history tells us that Raleigh Finlayson ended up with Creasy Dam and now owns Sons of Gwalia mine, and that's interesting. But anyway, we developed. What we did at Sons of Gwalia after we got control of it was a very simple thing. The previous management were advising the board that to look to actually develop the extensions of the Sons of Gwalia mine below 1,000 metres depth required sinking of a shaft and then drilling from the base of the shaft. Of course, we know that the shaft was going to cost $120 million. It would take 2 or more years to do, and then you still had to do all the drilling. And my advice to the board at the time was, no, we actually don't need to do that. You can drill from the surface, but that was rejected by the management. So, of course, when we got hold of the assets, that's what we did. We drilled from the surface. Now, the cost, yes, was $300 a metre, which was outlandish, outrageous, but the cost was only $30 an ounce. And that was the critical component. So we were able to then, after consultation with resource geologist specialists, what spacing did we require for them to be able to sign off on indicated resources to get to reserves? Because we knew we had to raise capital at some stage to redevelop the mine. Anyway, the answer was if we drilled it at a 40 by 40 metre spacing, even down to 1,800 metres, that would most probably, was the answer, most probably get to indicated resources. And that's what we did. And we generated, I think, 3 million ounces in resources from that drilling and 1.8 million ounces in reserves, and were able to redevelop the mine. And it's since then it has produced more than 2 million ounces. So, but the critical thing was that we're able to do that relatively quickly, because you could have 2 or 3 or 4 rigs on site. The drilling results were generally better than what the model had indicated. It had inferred resources below 1,000 metres, but so you actually had a picture as to how much gold you would get once you intersected the ore body. And in many cases, the drilling results were better than what the model predicted, which was heartening, but at the same time was necessary. So in the end, we're quite confident about the resource model, and particularly about the grade. And the grade stood up very well for a long time.
Was Tower Hill part of the picture back then too?
Tower Hill, that's a good question. Tower Hill we looked at Tower Hill hard. It had infrastructure issues, which Genesis have resolved, I think, very elegantly, in terms of stopping the railway line rather than moving the railway line. From an underground viewpoint, it was clear that the ground conditions were not favourable for underground development. but and I did think at one time about driving a decline from the base of the Sons of Gwalia shaft to decline, to Tower Hill, but we didn't get around to doing that. But that was an idea we were contemplating at the time. But I think what Genesis have come up with is a very elegant solution. Big open pit at 2 grams. Wow.
Isn't it remarkable, 20 years ago, put a shaft in Gwalia and find a way to get around this railway for Tower Hill. The strategy hasn't changed too much. I mean, they explored the shaft and then they shafted the shaft plan.
The shaft to the shaft, yeah.
How do you kind of think about that period, that sort of 5-year block where you're managing the company? Did you have enough time to sort of focus on exploration and making discovery, or were you constantly dragged into the ups and downs of managing mines?
Well, I think history tells us that operations suck all the energy and effort, and we did have an ambition to get to a 400,000 ounce gold producer, which meant, and at that stage we had Sons of Gwalia and Southern Cross operations. Now we're going to be producing about 250 to 300,000 ounces a year. So we had to find another 100,000 ounce producer, which we didn't do, didn't achieve in the time frame. We did do a lot of drilling at Tower Hill, and that was an obvious one. And I do remember the time when we were drilling both at Sons of Gwalia mine, deep holes, so standing well back, see the rigs from the highway. But when we were drilling at Tower Hill, we had 2 or 3 RC rigs drilling, and the highway was quite close to Tower Hill. And when we started doing that drilling, the share price of St Barbara went up, just because everyone could see there was a lot of activity. Or I think that's what it was.
I really reflect now more so than having read about it before on this model of having the exploration chief and the sort of financing chief. Is that something you ever tried to recreate later, or is it just impractical?
I think that's probably worked with DGO, if we look hard at it. Bruce Parncutt, my colleague and co-director, yes, he was a geologist, but he soon went into broking and ended up being head of Macintosh Securities, which was was one of the 2 Australian brokers, and they ended up being taken over by Merrill Lynch, and Bruce was the CEO of Merrill Lynch. So his background was, he had a lot of experience in the market, and I think that combination is basically worked again. So the short answer is yes. I think it's a good model.
Yeah, and you obviously had a lot of success there with DGO. You told us a great story, which I'd love for you to share, on the discovery of Hemi and the advice you were giving, and what could have been, I think, some 6 years prior to the eventual discovery there.
Yeah. Well, look, and if I can just start at the beginning, perhaps, in that when Bruce and I got together in DGO had a market cap of $2 million, right? So it was, and the reason why was that because it was difficult to raise capital in that time, and we were doing. I was basically doing trying to emulate what Mark Creasy had done, and that was to pick up large areas and have greenfields exploration happen. When Bruce said he wanted to join with me, I said that was good, and we sat down and said, okay, so where's the best place to look for gold? And the real answer was that it's probably already held by both large and small companies. So having come to that conclusion, we said, okay, well, let's have a look at all the ASX listed companies that were exploring for gold in Western Australia. and there were about 160. And we very quickly, of course, got down to about 10, of which De Grey was number 1. And NTM was number 2, NTM ended up being taken over by Dacian, and number 3 was Yandal. And the reason for picking De Grey as the number 1 was that it had a large land area, and gold was known throughout the area. And we actually did an estimate, a risked estimate as to how much gold we could find by extending the existing deposits, and we made allowance for the discovery of a new one. Didn't know where that would be, but we made, because of the prospectivity of the land, we thought there's likely to be another Withnell or another Malina, 1 to 2 million ounce type deposit. And we figured out how much that would cost to drill, and we did it on a risk-weighted basis. So in other words, to extend Withnell or Malina to 1 to 2 million ounces, we thought the risk was quite low, so that was 75% success rate. But in terms of finding a new one, we thought, well, that had to be a risk rate of about 50%, 50-50 chance of finding a new one. Anyway, that led us to investing in De Grey. And we invested in De Grey at 20 cents at the time, and we were quite happy with that. And of course, the share price went down to 5 cents. So we realised we weren't that clever after all. But the market was sensing that De Grey had to buy out there was a Chinese partner that they had an option over to buy them out, and they needed to raise $13 million for that. So the market sensed that there was more money needed to be raised, so the share price went down anyway. Cut a long story short, Bruce and I helped them raise, with my son Grant, helped them raise the money at 5 cents, and one of the conditions was that we go on the board. Bruce and I would go on the board, which we did. I did spend, and the other large shareholder at that time was Kirkland Lake, and they didn't want to contribute to the capital raise, so they got diluted. But they did want to have a look at the land position one time, so they came over, and I, as a shareholder at that time, I went with the Kirkland Lake people, and we did a 2-day helicopter ride, looking at all the prospects. And the one thing that became very clear to me was that this was a vast area. It was 150 kilometres long and about 50 kilometres wide. And yes, there was gold deposits throughout, and you could actually sort of sense that in the past, companies and or individuals would be overwhelmed by the scale of what they had. So they always sort of went back to what they knew. So there was all this concept of incrementally adding to what had been found. And well, we had to think differently about it. And also, mind you, even highly respected academic geologists said, no, Pilbara's different to the Yilgarn. You're not going to find any big deposits. They only found small ones. Well, of course, you could dismiss that argument from a statistical viewpoint when you look at gold provinces. So we didn't take any notice of the respected geological wisdom, and figured out that, okay, so this thing was 150 kilometres long. It became clear there were about 4 areas, each of about 30 kilometres long, which had been hardly explored or poorly tested. And we knew each of the existing deposits were about 1 kilometre long. So it worked out that you could drill aircore drilling at 1 kilometre spacing or thereabouts across the structures, and each area, there were 4 areas, each area would cost about $1 million each to do that first pass aircore drilling. It took us a while to convince both the board and management that that's what they should do, In fact, took more than 6 months. But when they started, of course, the Hemi discovery was the first area they adopted this strategy, and it happened within the first 2 weeks. Now, the story, of course, is that the real story is that, yes, the geology team, led by Andy Beckworth and Phil Tamara, very competent people. But the strategy they had of finding a little bit more and building a central mill was always not going to really cut it from a shareholder viewpoint.
De Grey put out a DFS on. There was a study put on Mallina in 2019, I want to say, or 2018.
Yes.
Yeah. So that was the strategy.
That was the strategy.
Yeah.
It was, and we said no, we haven't invested in De Grey for that strategy. We've invested because you've got this large land package with enormous potential. So let's go and see if we can find. And of course, once you say, let's see how we can find it, you have to explain how you go about it. And that was the strategy bit. That we wrote it up, 4 areas, each 30 kilometres long. A drill traverse every 1 kilometre. Holes, I can't remember the spacing, was probably 160 metres or something along each line. And let's see what happens. That's the business that we're in, right? And yes, so as I said before, Hemi came up virtually within the first 2 weeks of starting on that strategy. And then subsequently, of course, we found, and De Grey have made this public themselves, they had actually drilled in the Hemi area 6 years earlier. The aircore drilling, the rods had got bogged in the gravel layer at about 40 metres below the surface, and they stopped. And if they'd gone another metre or two, they would have hit, I think it was Deucon or Eagle, one of those, which then would have, of course, escalated, and they would have found the rest of it. So the really critical point for explorers and for shareholders in exploration companies is to be absolutely clear that the drilling that's being done is effective. Because if it's not, then don't even bother starting. And if it isn't effective, then keep going until you have completed an effective drilling program.
This is a lesson that you've had several times in your career, and before we started recording, you were telling one of those very examples. Do you want to talk about your observation of the depth of drilling? And
it's a beautiful example, really, in that we're at Mount Pleasant, just north of Kalgoorlie. Mount Pleasant area in the 80s was one of the red hot gold areas, to the extent where even Western Mining got involved with Consolidated Exploration Company at the time, and Elders Resources were there. So it was one of the hot areas. Anyway, there was a mill there, and Centaur Mining bought the land package and the mill, and it was in the early 90s. The mill had about 6 months of reserves, so we had to find some new reserves. And went there, and you could see at Mount Pleasant there was this corridor about 8 kilometres long, about 2 kilometres wide, where there were several open pits, and it looked like there was drilling everywhere. So it had been drilled. So in effect, it looked like the job had been done. However, when you went to the open pits, you could see there was 20 metres of alluvial cover over the top of weathered bedrock. And in those days, in the 80s, aircore drilling, or RAB drilling as it was called, it was the next step after soil sampling. You drill down to about 20 metres, and often it was a standard depth. Okay, drill down to 20 metres, find out was at the bottom of the hole. So when we saw this in the open pit wall, that there was 20 metres of cover, I thought, let's go back to the maps in the office and let's remove all the holes from the maps that were less than 20 metres deep. And that created these vast gaps in what looked like an area that had been drilled. And so we drew up a pattern. Pattern, I think, was 240 metres line spacing, 80 metre hole spacing on the lines. The first gap that we drilled was 500 metres from the existing operating mill, and we found quarters. Again, within a month of starting on that strategy. And of course, quarters produced about 1 million ounces. So the critical thing in all of this is to be absolutely clear that the drilling has been effective in terms of testing what the geologist might be thinking about at the time. And I see it, I mean, even, in the Yandal Belt, for example. I mean, exploration's been going on there since we found Bronzewing in 92. There's still large areas when the geologists drag the maps out that look like they've been drilled, but then you ask the question how much of it's effective, and most of the holes go away. So it's underexplored.
So is strategy more important than geological thinking?
You have to have both. I mean, the success of Hemi, for example, is a function that Andrew Beckwith and his team knew exactly what they had to do and how to go about it once they got onto it. So you can't separate the two. You actually have to get the right strategy and then have the right team together.
If we look forward now, Ed, you're doing some exciting stuff in South Australia and using your abundance of experience and knowledge. How do you think you can sort of relay that? Like, obviously, you're doing that in a private structure. What are the sort of differences you're bringing forward, and how sort of excited are you by the prospects?
Well, I'm personally doing two things. One, as part of a private syndicate, we're exploring in South Australia for sediment-hosted copper, and we're exploring for DeGrussa-type VHMS deposits in the Ureter and Briar Basin, north of Meekatharra. And so we're doing that, and we're applying the logic. And fortunately, we have enough capital between us to actually follow that through. And as a consequence, we've been exploring either as DGO or privately on the Stuart Shelf in South Australia now for probably 10 years. And what we're looking for is sediment-hosted copper, using the Zambian copper belt model as the analogue. And we've established that the concept is applicable, and we found copper mineralisation, and now we're finding economic mineralisation up to 20 metres at 1% copper within 20 metres of the surface. Everything's undercover. We have about 200 kilometres of strike of what's called the transition zone, which is where you would expect the copper mineralisation to be. And we did a very large soil sampling program last year. I can't remember how many samples we took, but it's identified a number of areas of some scale, and we know this is reliable because we've got the soil sampling results over where we've actually found copper at depth. So we're very optimistic about the potential outcome. And of course, the infrastructure benefits are incredible, and it's only about an hour from Port Augusta. There's a highway to Alice Springs, there's a railway line, there's pipelines, and there's electric transmission lines going to Olympic Dam, all within 1 or 2 kilometres of where we're exploring. It may in fact be a disadvantage that they're there. If we find copper underneath these transmission lines, but we'll worry about that when the time comes. But that looks a part of it's a joint venture with Gold Road, and part of it we own 100%, or Discover Co, the company, owns 100% of. In terms of what we're doing at Eurida, we're exploring there. Again, it's a joint venture with Gold Road, because we've joint ventured back into the land that DGO had, and Discover Co is in the process of earning its equity earning back that equity in that land. So it's people have been exploring for DeGrussa type mineralisation in the Briar and Eurida Basin since the 1970s. And DeGrussa is the only one that's been, and Monty, which is a sideshow, the only one that's been found. But the geological evidence is strong that there'll be others. And we've been exploring there now for several years, and we're encouraged by what we see. We haven't done a lot of drilling. We haven't done a lot of recent drilling in the Eurida, so that's really the next step. And then the other thing that I do is I invest in the existing ASX listed explorers, and with the same lens as what we use to identify the Hemi prospect. So in other words, invest in companies that have land in scale, potentially own 100% of the land. Management has got to be competent and capable, and so we've invested in Yanal Resources and Cal Gold, and both of those have potential for are improving gold provinces for a start, and have potential to find decent sized discoveries.
Like with DGO, you took issue with being referenced as an exploration company in the past, and you're like, we're in the business of discovery, not exploration. So I find it quite intriguing that the private entity you're dealing with now is called Discover Co. It's in the name; you can't mistake it. Why do you feel strongly about the difference of being an exploration company versus a discovery company?
Well, it's the same reason why I don't like the word project.
Yeah.
We're in the business of making discoveries, not exploring. And yeah, is that being a bit pedantic? Well, if it is, bad luck, because the purpose of drilling holes is not just to go through the process, but is to get an outcome. And yes, you've got to go through the process, and all the checks and balances that need to occur. They all need to occur. But at the end of the day, unless we're clear about why we are doing what we're doing, you can lose sight of the fact. I mean, there are geologists who love doing geology. Whether they find something or not, sometimes is not the main game. They just like doing geology. I like being involved in making discoveries and using geological knowledge to do that.
Is that outcome, or the chase, as you called it before, still as exciting as it was 50 years ago?
Of course it is. It's getting a drill hole result, when not so, even when you do expect it, is when you actually have it confirmed that this is potentially something new or something big, or both. It is exciting.
I want to tap in a little bit to how things unfolded with DGO. By virtue of DGO's investment in De Grey, DGO's market cap also it exploded. Always traded at a bit of a discount to NTA, and for that reason, maybe it was a pretty obvious entry to pick up a substantial stake into De Grey. So ultimately, how that culminated is Gold Road acquired DGO. You're sitting on the board of De Grey around this time, I think. So how are you kind of evaluating the lay of the land, knowing that you're sitting on a world-class deposit and it's going to be of interest to majors, and that you're also still at DGO, which is going to have the stake, which is very attractive to an acquirer?
Well, that's an interesting question, and it does raise the issue of conflict, and that's in the end. What Bruce and I in particular decided to do was to, every time we invested new money, we're actually investing it, we're diluting our interest, because our share price wasn't reflecting the true value of even our holding in De Grey. And when we started on the process of selling DGO to gold, then potential conflict arose. So it was best for us to step down, which is
Yeah. But do you remember the emotions in kind of being in the midst of a pretty meaningful? It was different. It's like, yes, you've been around discoveries before, but there was something different about De Grey, in that De Grey was a pure play exploration company with a giant discovery, as opposed to being in.
Yeah, no, I mean, there were mixed emotions about stepping away from it. Because I think, apart from being involved in exploration, in the exploration phase, also been involved in building mines and building villages. And when you think about that just for a moment, we actually built Jundee village 30 kilometres from Luna. We built the Bronzewing village 40 kilometres from Leinster. We built the Sons of Gwalia, the Sons of Gwalia village in Leonora, right? And yet, and there's a debate starting now about the benefit to all stakeholders of mining activity. But when I think hard about it, if you think about our traditional owners and the Aboriginal issue that we have, then you have AFL footballers who are top of their game, right? Where do they come from? They usually come from the wheat belt towns in Western Australia, where they play football with the local teams. That's where they get their skills. And yet, if we'd actually had the mindset and the government support and the community support to say build our facility like they did in the 1960s when BHP and Rio built Port Hedland, Paraburdoo and Mount Newman, etc. If we'd had that mindset, you would have been able to establish communities at Leonora and at Wiluna, as an example, and at Leinster, where you could accommodate all aspects of our society. And then you would have been able to, if you dream a little bit, you would have been able to have football teams in Wiluna and Leinster and Leonora, where the young Aboriginal men could play the football and the young Aboriginal women would play netball, and you'd have competitions, and you get this community situation happening, as does happen in the wheat belt towns, right? That's never happened, and and the reason why I raise this is that I've raised this particularly with De Grey when I was on the board about this same issue, and it's for them to decide. But in the end, it's only an hour from Port Hedland. Is it really the best in an overall sense when you've got a 30-year mine to actually have fly in, fly out from Perth when you've got Port Hedland? Now, it requires a lot of coordination between governments and companies and communities for these two things to work. But if you don't even start on it, it's not going to happen. So, Yeah.
With that all said, you have made an active decision through your career to focus on Australia, to focus on Western Australia in particular. So you clearly think the opportunity set that we have here sits above the pack.
Well, they do in that clearly. I mean, Australia, 85% of the rocks that host the large deposits are undercover. So modern day exploration is only just starting to unpack that in my view. Obviously, the infrastructure in Australia in many places is supportive of any potential mine development. The regulatory environment, whether it's environmental or whether it's to the traditional owners or whether it's with conflict of land use between farmers and miners, all of that's pretty well understood. And yes, it can be bureaucratic and it can be slow, but there usually is an answer. And, okay, you go to Africa where you can walk up to a mine. Yeah, Australian technology will show you where you have to drill, right? But then you have the sovereign risk, and that sovereign risk keeps playing out to the disadvantage of shareholders, Australian shareholders anyway.
Well, it's to our great advantage, Ed, that you've spent your career exploring in Australia and discovering, and let's hope there's a few more discoveries left in future. Thanks a lot for joining us and sharing all your stories and thoughts and perspectives.
Well, thank you.
There we go, mate. Another fantastic bit of insight. It's all made possible thanks to our fantastic partners, Sandvik Ground Support, Focus, the platform by Market Tech. Check it out now and get your tickets to IMARC, October 21 to October 23. Investors go free. Hooroo!
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read our disclaimer.